What's going on, folks? Welcome to today's Markets in Focus. It's currently Friday, March 21st, 2025, 1:09 p.m. Eastern Standard Time. And this week has been volatile. Last couple of weeks have been volatile. The good thing is there's some underlying strength that we can talk through that has not been present over the last couple of weeks. So let's get into it. First things first, intermarket analysis, looking at different asset classes, areas of the market, how they performed this week. Risk assets performed pretty good, pretty okay, a lot different than they have over the last 4 weeks. I think the S&P 500 was going on its fifth potential week of closing lower, and as of right now, we're actually up on the week, and the Qs are floating with a potential break even on the week. So once again, a change of sentiment over the last 5 trading sessions. We'll see if that continues in the next week, but risk assets look pretty good, right? Copper's up in near all-time highs, right, up 5% on the week. Bitcoin's up 4.5%. We have crude up. We have small caps up. It's the last time small caps were up on a weekly. It's been a long time. We also have equally weighted ETFs. The RSP and QQEW also up on the week as well. So for the most part, while this week has been super choppy and volatile, things have performed better than over the last 4 weeks. And I think that opens up the conversation to what do we expect is going to happen over the next couple of weeks? Do we expect this breakdown to continue? Do we expect potential respite, some sort of bounce? Is there a bounce into a resummation of the primary uptrend? And at that point, we really have to take a step back and look at the totality of the data. So let's go through a bunch of charts right now and kind of think through this process logically. First things first, we're on the weekly here with the S&P 500. I'm going to change the RSI to the 5 here. What I want you to notice is 2 things in particular. I'm going to delete that. We are currently finding support for the second week at the 1.618 fib extension, the 55225 area. This was our original price target when we went long stocks at the beginning of 2024 on the 475 breakout, and we are now finding support there. It's a very logical place for the market to find support in a pullback within a primary uptrend. Now, we do have to find out if this support is going to hold over the next week. As of right now, we do have a minor bounce to the upside, but it's holding exactly where it's supposed to hold from a technical standpoint, so we'll put that in the bullish camp. Secondly, the RSI. Inside of TTI, we don't like buying oversold situations, but when we're setting expectations, it's useful to look at where the momentum is or where it potentially isn't anymore. If you look at on a weekly time frame, the S&P only finds oversold conditions roughly once per year. In 2023, we came down here in October. In 2024, we came down here in April. And in 2025, we're here right now. Typically, in a primary upturn, in a bull market, the S&P 500 does not spend too much time below in oversold territories. Now, we need to obviously confirm that over the next 2 weeks. We need to see a break back up and over the 30, and that would give us a little bit more enthusiasm to be buying positions, but it has to start somewhere. So very oversold conditions, historically speaking, within bull markets in the S&P, which is why we're not looking to go out and open up a bunch of new shorts right now. We've opened up shorts over the last couple of weeks. A bunch of them worked, some of them didn't. We've been able to take advantage of some short-term breakdowns and some of that volatility. But is it time to be opening up new shorts, targeting new lows? I think right now the reward is not necessarily there, at least in the short term. It does look like we could be opening up for some sort of bounce. When we pull this up onto the daily and we change the RSI back to default at 14, you can see, and we're going to throw a MACD indicator on, which is just another momentum indicator. But you can see even on the daily, we're starting to potentially turn that momentum around, not really pushing into new lows with high selling momentum anymore. The RSI bouncing off of the oversold territory, and while it's not necessarily ready for us to go and buy, we like the RSI up and over the 50, we are starting to see, at least on the MACD, a crossover, which signifies that momentum should be coming into the bull side at least. In the short term, we still need to clear the overhead supply zone in the S&P 500 and that 200-day moving average before TTI really wants to start getting along again. Our members really don't want to buy things under the 200-day moving average, which is totally acceptable. But I think that there's some underlying strength here that needs to be pointed out. Not only that, but we're also seeing it in some individual stocks, some sectors, which we'll get through in a second. The next thing I really want to talk through is the value versus growth situation. So if we look at this year to date, these are a normalized performance of value versus growth against the S&P 500. Value has smoked growth all year, really starting to diverge in the middle of February, which is obviously when the market started to peak and then break down. In a strong primary trend, in a strong bull market, we would expect growth to be outperforming value. And that's just not what we're seeing. We haven't seen that since realistically last year, right? And the market started to break down in the middle of February. Value really started to outperform growth. Now, what we expect is if this market really wants to bottom here and open itself up to being bought again, we should see these two ratios converge. The alligator jaws should clamp shut, is what I would be looking for. I want to see value start to underperform and growth start to outperform the S&P 500, and these ratios converge down in the zero. And in a very strong market, growth should be outperforming value. We're not quite there yet, but we are starting to see a potential bottoming out process in these relationships. Growth is starting to potentially bottom out a little bit against the S&P 500, and value potentially might be starting to roll over here. It's still way too early to make that call, but once again, there are hints, and it has to start somewhere. Is this the beginning of a bigger move? I think we're going to have to wait until next week to figure that out. And then if we think about not only U.S. domestic markets, everybody's looking to try to buy the dip. When is the S&P going to turn? When is the NASDAQ going to turn? And I get it. People want to own the high flyers, the Mag 7s, the high beta software stocks, the semiconductor stocks, et cetera. There's going to be a time and place to own that. But really where, and it's only caught on for like the last week and a half, a lot of the strength is coming through is international. So if you look at EFA, it's an ETF that tracks international stocks. There's zero exposure in the United States. There's zero exposure in Canada, and I believe there's zero exposure in South Korea. So we're really looking at the international community of stocks here. And as you can see, the first time since GFC, we're starting to potentially break out into all-time highs. Now, inside of TTI, an absolute breakout would be great, but it's not the only reason why we're interested in this part of the market. We're also interested because on an relative basis, we're starting to potentially see a regime change. Now, it's way too early to stick our flag in and sell all of our U.S. stocks and say it's time to own everything international. But, which this has been going around for the last 2 weeks now, rate of change is sitting up here. The rate of change of stocks or money, flowing out of the United States and into the international community is at an all-time high. We have never seen this much money flow into the international space. So what we're looking at here is a potential turn in relative strength, which, by the way, we're not quite there yet, but we're pressing up in towards, at the very minimum, yearly highs here. Once again, has to start somewhere. So we have absolute potential breakout into all-time highs. We have a relative against the S&P 500 potential breakout coming with rate of change and momentum kind of backing that up. At the very minimum, as a trader or an investor, it's important to understand what types of stocks in this environment will be doing better. And it's not going out and just buying all of the U.S. domestic stocks that find a floor. Opportunity cost will burn you if international stocks really start to outperform on more than just a weekly basis. We're talking quarters or potentially years. This is a big deal. Not saying it will happen, but it could. And inside of TTI, we've taken over the last 3 weeks a bunch of different international stocks. We have exposure in a bunch of different sectors internationally. So if this does happen, we will be able to make some money off of this. And if you're not in TTI, I encourage you either to join and take the trades with us live or go and do your homework and find what types of international stocks you really like. On a relative basis, when thinking about stocks, we can also think about stocks versus bonds. All right, we can see here that right now there's a pullback coming in on the weekly, but this is still a very strong uptrend that started after the COVID lows. We really started blasting off equities against bonds. And realistically, while there has been a slight pullback over the last couple of weeks, this is a pullback within a longer uptrend. Stocks continuing to outperform bonds until this particular trend breaks down. There might be an opportunity to own some of that TLT or some of the shorter term stuff. But when you're thinking about it from an opportunity cost standpoint, equities are still in favor here as long as this primary trend is up and to the right. When we look at TLT itself, let's bring this down into the daily here. There are some opportunities to potentially get long this TLT area, but we're not necessarily focused on longing this stuff. I think this is not necessarily dead money, but there's better opportunities out there, whether that's going long international stocks or going long inversely correlated assets to the equity market right now, U.S. equity at least. Bonds have just not been a very good proxy for premium, for profit, until we clear that 100 area level, which I don't know if we're going to this year. We could, maybe. Until we clear this 100 area, we're in a multi-year horizontal choppy range. What I would prefer to use TLT as is a proxy for whether or not we think equities are going to continue to catch a bid. And that's the relationship that we've been trading with for the last 2+ years actually broke down this year, right? Bonds have caught a bid over the last couple of months and equities have not. Equities have actually suffered. That's the exact opposite of the environment that we've been trading through since the beginning of 2024, end of 2023, where bonds and equities were positively correlated. Every time bonds got bought, so did equities. Now we're finding ourselves back in the usual inverse correlation between bonds and stocks. So we'll see where that's at. But as of right now, there's no real reason to be running in bonds, at least from a technical standpoint, as equities are still outperforming in the long run. But if you look at stocks versus gold, on the other hand, gold is outperforming, right? Let's actually use gold against, SPY against GLD here. The opportunity cost right now of owning stocks over gold has cost you more than at any point in the last 5 years, right? So gold has just absolutely outperformed over the last couple of weeks and realistically for quite a while. Stocks. I mean, I'm glad inside of TTI we own a position in GLD. We'll look at that in a second. But as of right now, the opportunity cost of owning stocks gold is just absolutely blown it out of the water, right? While the market has pulled back since the middle of February, gold has actually continued to break out into all-time highs. And so when we're thinking about how we want to allocate our very scarce capital, you should be looking or should have been looking at an opportunity to potentially buy some of either the shiny rocks or other areas of the market while this market sell-off has been going on. If we look at GLD in particular, which is kind of our vector of getting long gold, we're up at all-time highs. Gold is up and over $3,000 an ounce right now. Our original entry here back in March of 2024, and we've added a couple of times. This is a really good trade for us. So think outside of the box here. Stocks and gold, we're going up at nearly the exact same rate over the last couple of years, and then over the last couple of weeks, gold has absolutely outpaced stocks. Don't be afraid to own some of this stuff that can both move in the same direction for a very long time. And if you're looking for exposure, maybe gold continues here, maybe it doesn't. The trend looks phenomenal, but it's really hard to get into this particular trade right now because we're so far extended. But if you're looking for a potentially correlated asset class, look at gold miners. Lagging behind quite a lot, all right? Lagging behind quite a lot so far between gold itself, but we're getting this massive multi-year horizontal breakout here with this nice consolidation phase into all-time highs above 44.5. Not all-time highs, but multi-decade highs into above 44.5. We have a price target here of $58. And there's plenty of stocks out there that you can actually go and own that are breaking out that look very similar to GDX2 that we're currently in right now. AEM, which you can see here breaking out into all-time highs over the last couple of weeks. We have a position in there. We also have a position in KGC, which is breaking out into, I think, 13 or 15-year highs. There it is. So there's opportunities right now to be long gold or gold miners and giving yourself an opportunity at participating in uptrends, which is what we want to do inside of TTI. There's that old adage, there's always a bull market somewhere, and in gold and gold miners right now, it certainly looks like it's starting. There's a couple other things that we're looking at here on an individual stock basis. Inside of TTI, absolute strength matters, but relative strength matters just as much, right? We want to own things going up, but we also want to own things going up more than everything else. EXE is a good example of that. This is one of those stocks within the energy sector right now that is breaking out into all-time highs. We're pulling back and retesting those late 2022 highs, so nice consolidation-based breakout here. We're trading north of a 200-day upward sloping moving average and within a bullish momentum regime. It's really nice when we look at this from an absolute standpoint and a relative standpoint. Look at this against the S&P 500 or the energy sector. You can see that there's a lot of absolute strength there and relative strength as well. Also Okta, and as a matter of fact, I can go ahead and show you what that relative strength component looks like. Okta is a large cap software stock that's breaking out of a stage 1 into a stage 2 base here. And so think about it. The market has come down quite a lot over the last couple of weeks, but Okta, for whatever reason, has not. That's a clue to us. It's relative strength. For whatever reason, financial institutions don't want to sell this. It's not up for me to decide why, but it is up for me as a technician to key in on that and potentially own it in the event the market does turn back to the upside. We're trading north of a 200-day moving average and within a bullish momentum regime. And if we look at this on a relative basis, Okta against SPY, and we zoom in here over the last 6 months, you can see, let's get rid of that rate of change indicator really quick because it doesn't matter in this particular instance. You can see here that there's a lot of relative strength here going back 6 months against the S&P 500 as well, right? Over the last 6 months, not only has the stock performed well on an absolute basis and is now breaking out, but it's also performed well against the S&P 500 and now potentially breaking out into new highs against the S&P 500 very shortly. We can look at that in terms of TGTX as well. TGTX is a name that we went long a couple of weeks ago. It's a pharmaceutical company. We liked it above 36, price target 56. You can see relatively the same type of idea. Upward sloping 200-day moving average, bullish momentum regime. And if we go and we look at TGTX against the S&P 500. Let's get rid of that RSI. You can see that once again over the last year, lots of strength there, relative strength there as well. And now with TGTX breaking out into new multi-year highs, also on a relative basis, looking like it wants to break out into multi-year highs as well. And then the last one is MP, right? A rare earth metals company that we opened up a couple of weeks ago or a couple of months ago, I think at this point. It's working well for us. We can look at this from both an absolute and a relative standpoint. We're breaking out above 23.5, upward sloping 200-day moving average, bullish momentum regime, and one-year highs against the S&P 500. So once again, aside of TTI, we're focused on things not only moving up, but also moving up against the broader market. And when the S&P 500 is crashing, which you can label it a crash or not, but it's down double digits at one point, right? 10%, I believe we entered. Look for the stocks that are not going down with the market. What stocks are holding up? Those are clues. When the market turns, there might be an opportunity to own those, and those will outperform. Really quick, I just want to touch upon MAG 7, particularly we can use MAGs here. MAG's trading down, I believe, 20% from its all-time high right now. Pretty close to 20%. There's really no compelling reason for me to want to buy this stuff yet, but there's also not a compelling reason for me to want to short this stuff. Once again, we are bouncing off of the oversold territory, potentially hitting new higher highs. This is a potential divergence in momentum to the bull side here. We had a bearish momentum regime start. We'll see if that eventually eclipses once the RSI crosses 50. But here we go. Price is moving horizontally while momentum is moving up and to the right. So a little bit of bullish divergence there. Is there a compelling reason to own this stuff yet? I don't know. Is there a compelling reason to short? I don't think the shorts make any sense here. I think we're finding support. Bullish momentum is coming in. I think, once again, like we talked about at the beginning of the episode here, that shorting things in the whole tends to be a very difficult short. We're starting to see, at least in the short term, sentiment start to change, momentum start to change, and so maybe it's not the right time to short. And Tesla's a great example of that. Everybody wants to short Tesla. I personally don't care whatsoever about what you think about the owner or the politics, but from a technical standpoint, I think it's foolish to want to open more shorts here when one of the largest stocks in the world just drew down 55.5%. I think that's absolutely insane. I think this particular chart is washed out. We're right back to the same levels we were when we started opening up Tesla last year, so I think there might be a better opportunity to the long side, to the short side here. Once again, we're getting some sort of divergence in momentum to the long side here. I think that Tesla, at least in the short term, has an opportunity to bounce and blow out late shorts here. And I think that's important. It's not just Tesla. I think Tesla's kind of the flagship stock, though, that shows that. Everybody hates this. They're torching Teslas and King Teslas, and everybody hates the CEO. And so naturally, there's going to be a lot of negative sentiment here. And if you can keep your head on straight, I think there's an opportunity here from the long side brewing that might make more sense than the short side, at least in the short term. And we'll see if that actually follows through into some sort of long-term strength. When we're thinking about global economy and how everything is supposed to roll over here, I think one of the things we should be focused on here is copper. If the world is about to go to crap and the world economy is about to, crap out and you should sell everything, I'm wondering why copper's hanging out here up near all-time highs. Like, what's going on here? Why are we sticking this weekly breakout above $5? It doesn't make sense to me that the global economy is under pressure if copper is breaking out. This stuff is used in everything, and it should be viewed as a demand side, right? There's a huge demand for copper. It's probably because a lot of things are being built, and if a lot of things are being built, it's probably because a lot of people are buying things. So it's really hard to take a step back from a sentiment standpoint. Sometimes we're inundated with bad news all of the time. Media literally has their job based on it. But if we can take a step back and look at what the markets are actually telling us, it doesn't really look like there is a huge slowdown in the global economy coming. At least from copper's standpoint, it doesn't. We can also look at oil. Energy in particular first we're going to look at, and then oil. I really like this fractal. We've been talking about this for a very long time, but we've been hanging out up near all-time highs for the last year and a half after this enormous move off of the 2020 low, right up in towards all-time high by 2024. This really nice move. I think on a tactical basis, if we go and we look at the daily here, we're seeing a lot of energy-related stocks pop up on 20-day and 50-day high list, right? I think anything above kind of this $90 area or the 200-day moving average in XLE could be viewed as a potential short-term tactical trade to the upside. We did just open up one, EXE, right? We're looking at potentially opening up more. Energy looks good here. Not only, and you'll see this in two slides, on an absolute basis above the 200-day moving average. Does this look pretty good, right? We're currently in the beginning of a bullish momentum regime going back to the middle of January. We have a potential $100 price target, and then what happens above 100. You'll see this in two slides, but energy is actually one of the leading, if not the leading sector on the year. And so not only are we getting absolute performance, but we're also getting that sector performance as well on the back end. from a leadership position. Oil finding support at the previous spot it's found support at 100 times over the last 4 or 5 years. I think that's important. As long as oil can hold above like the 65-ish level and XLE can hold above its 200-day moving average, I think there's a tactical opportunity to get long energy, and I think that we probably should continue to open up a couple more positions in that particular area. I want to wrap this session up just by looking at U.S. sector strength going back year to date, because it's a very different market than what it was last year and in 2023. Energy is leading. Healthcare is leading. Two areas of the market that are lagging the most, right? Tech and consumer discretionary. Obviously, those are two very, very, very important from a weighting standpoint areas of the market. And so the S&P 500 is down on the year 4% as well. Inside of TTI, we are more focused on owning the leaders, owning things moving up and to the right, not necessarily timing the bottom on some of these crushed sectors. We're more than willing to buy some of them when they start to shape up, but as of right now, they are not. So we're cautiously optimistic, cautiously approaching these potential bottoming out stocks here, the higher beta stocks. And we're focused on names that are still performing well: energy, healthcare, materials, financials, etc. From an industry standpoint, we can see here, at least over the last 5 days, a lot of things have started to change, right? Semiconductors, which were performing very, very well last week. At the end of last week, we had, I believe it was the second best performing industry group on the week, is now almost at the bottom. Just an absolute crap show here in semiconductors. It really underpins kind of the volatility and everything that we've seen over the last couple of weeks here. The market is really just throwing everything around. But for the most part, most industry groups, at least as of right now, we still have a couple hours left of trading, are going to be closing to the upside. So once again, is this a bottom? I think there's definitely some things to be looking at here. There's definitely some reasons to perk up a little bit. If you're a bull, if you're a bear, is this the right time to short? I don't think so. I think shorts over the last 3 weeks were probably the time to start opening those up. I think at this point, at least in the short term, there's a relief rally. Whether or not we clear that overhead supply and get back up and over the 200-day moving average in the S&P 500 is kind of my big gauge here. We want to get up and over 575, and we want to get up and over the 200-day moving average before we really feel comfortable about buying a lot of stocks again. We could be there as early as next week. It's not that far away. We could also be testing the 200 and bounce right back down. I don't know what's going to happen. I know there's some underlying strength appearing in the markets. Whether or not that translates into a big push up and over overhead supply, that's anybody's guess. So we're going to continue to remain cautiously optimistic. It's a stock picker's market right now. Some things are going up, a lot of things are going down. Take your pick on what you want to trade, and don't be afraid to take profits a little quicker in this type of market environment. Okay, if you like this type of content, please like and subscribe. If you have any questions regarding anything we went through in today's Markets in Focus, please leave them below. And I will catch you, if you're inside of TTI, on Sunday night for a Sunday night strat session. If you're not inside of TTI, I encourage you to check us out. The link is in the bio. We do this type of stuff every single day. Sit through, learn a bunch, take the same trades with us, etc. Catch you guys Sunday night.